Hello and welcome. The topic for presentation is Non-Operative Financial Holding Company or NOFHCs. In 1993, RBI gave guidelines for entry of private sector in banking and issued licenses to 9 banks. Further on, 2 more banks were given licenses, thereby making 11 banks to be categorized under new private banks at that time. Presently, there are 7 new private banks operating in India. These are Axis Bank, Development Credit Bank, HDFC Bank, ICICI Bank, IndusInd Bank, Kotak Mahindra Bank, and finally we have Yes Bank. The need for banking licenses in private sector was actually reiterated in Union Budget 2011 and draft guidelines came up in August 2011. These guidelines were then given a final shape in 2013. Some of the notable features of these guidelines are both public and private sector entities and NBFCs can set up a bank which will be wholly owned NOFHC or Non-Operative Financial Holding Company, and this company will be registered as a NBFC. Then we come to fit and proper criteria. Now, this is laid down by RBI, under which it seeks feedback about the past records of credentials and integrity about entities from other regulators, enforcement and investigation agencies. Then minimum paid up equity capital requirement was of rupees 500 crores, and at the start of banking operations, NOFHC should hold a minimum of 40% equity capital of a bank with a lock-in period of 5 years. This can be brought down to 15% within 12 years. Also, another point to be noted is these banks will have to get listed within 3 years of commencement of operations. Then entities will have to satisfy a condition of opening 25% branches in unbanked rural areas with a population of 9,999. Now, banks should also achieve priority sector lending target of about 40%, and finally FDI is capped at 49% for first 5 years. Significance of NOFCs. Now, the primary objective of NOFHC was to separate several financial activities which are carried out by same holding company. Now, that is, the holding company can carry out other commercial or industrial and financial activities, but one should not encroach upon the functions of another. However, NOFHC is allowed to engage itself in several other financial activities, like it can enter into joint ventures or associate ventures, etc., but only after a period of 3 years of its formation. And each such activity is subjected to the scrutiny and supervision of its primary regulator. And RBI also has the power to call for any information and intervene at any time when the situation demands. Finally, coming on to the regulation, the NOFHC will be registered as NBFC or non-banking financial company with RBI as discussed, and will be governed by separate set of directions as issued by RBI. With this, we come to a conclusion. Thank you.